Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. A Patreon member asked me to take a look at Square stock to see if it's a great company for long term. Square is one of the top holdings in Cathie Wood's ARK Innovation ETF. In this video, I'm going to analyze Square stock for you. Personally, I want to find out if Square is a great stock for long term. You may ask these questions. What is Square's long-term growth prospect? What are the risks? And what is Square stock's fair interest value per share? To answer all these questions, I will talk about these topics in this video. First, I will talk about what is Square's business model. Then I will talk about what are the two long-term growth catalysts. I will talk about what are the three main risks you should know about. Then I will talk about what is Square's fair interest value per share. I will also talk about am I buying Square stock. If you like this video, make sure to smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a VIP patron. You'll be able to follow all the latest stocks I'm buying every month in my personal portfolio, and you will be able to download the latest intrinsic value calculator for all the stocks I'm analyzing, so you will know when a stock is currently overvalued, fairly valued, or undervalued. The link is in the video description. Take a look, let's start. So what is Square's business model? Square is one of the largest payment service providers to sellers in the US. It sells point of sales POS systems and provides payment services to sellers for both their offline retail stores and their online stores. Square provides POS systems to sellers you often see in small to medium-sized retail stores and restaurants. These POS hardware include the Square Terminal, Square Stand, and Square Reader. As of now, Square lets sellers to create their online stores, to manage their inventory, to process transactions using Square's POS services. This is very similar to Shopify's online store platform. Square has a cash app that lets users use their smartphones to transfer money to friends and family. It lets users to buy things online and offline at retail stores, to deposit money from their bank accounts, to store their money, to receive direct payroll deposits and government checks, to receive money from other people, and to trade stocks as well as Bitcoin. Square's cash app competes directly with PayPal's Venmo app. You may wonder, how does Square earn its revenues? On the seller side, Square's POS software is free. Sellers pay when they take a payment from customers. Square earns revenues mainly from processing transactions for sellers. So for example, in a typical transaction, its POS system charges a processing fee of 2.65% for all major credit cards plus a flat fee of 10 cents. If sellers use Square to set up their online retail store, sellers typically pay a transaction fee of 2.9% plus 30 cents per transaction. Now, Square also earns subscription revenues. For example, if sellers want better plans with more value-added services for their online stores, sellers pay $15 to $85 per month. This is very similar to Shopify's subscription plans. On the cash app side, Square earns revenues mainly from transaction fees. These fees are generated from instant fund deposits, credit card payments, ATM withdrawal, and Bitcoin trading. Now, Cash App also charges sellers transaction fees if they accept customers to use Cash App to buy things. I want to show you some of the highlights from the recent Q1 2021 quarterly earnings. It shows Square is still in the very early growth stage, but it's not a very profitable business yet. In the recent Q1 2021 quarter, Square's total net revenue was $5.06 billion, up 266% year over year. Bitcoin contributed 69% of the total revenue. Excluding Bitcoin, Square's total net revenue was $1.55 billion, up 44% year over year. Gross profit was $964 million, up 79% year over year. Here is the interesting thing part. Bitcoin contributed 69% of the total revenue, but only contributed 8% of gross profit. In comparison, Square earned the largest gross profits from transaction-based revenue and subscription and services-based revenue. Now, Square's business is not very profitable yet. The company is still in the very early growth stage. For example, in the recent Q1 2021 quarter, its operating income was $67.7 billion and its net income was $39 billion. Its operating margin was 1.3% of its total net revenue. As of now, Square generates most of its revenues from the United States. Its international revenue was 2% of total net revenue in the Q1 2021 quarter. When it comes to investing, we have to be forward-looking, so let's talk about Square's two long-term growth catalysts before we talk about its intrinsic value per share and its risk. I I believe Square's first growth catalyst is its increasing gross payment volume GPV and its increasing gross profit. If you look at this gross payment volume GPV and gross profit charts here, you can see gross payment volume is the most important metric for Square because it shows the amount of transactions that are going through Square's payment services and its Cash App services. Again, Square earns most of its gross profit from transaction fees and subscription revenues. As long as Square continues to have an increasing gross payment volume from its seller and Cash App ecosystems each quarter, we can expect Square will have increasing gross profit and increasing operating income. If you look at this seller GPV mix by seller size chart here, you can see an increasing amount of GPV is from sellers, more than 125,000 in annualized GPV each year. This is a good sign because it shows that Square is acquiring more larger sellers that use more Square products and services. Larger sellers can generate more gross profit for Square compared with the smaller sellers. Square's management said this in the recent earnings call. We continue to make meaningful progress with mid-market sellers, which now account for 30% of our seller GPV mix, up 4 points from a year ago. In the first quarter, mid-market seller GPV grew 43% year over year, more than twice the growth of total seller GPV. We experienced a notable recovery in GPV from existing seller cohorts, and GPV growth also benefited from strong acquisition of larger sellers during the pandemic. As the US economy reopens and as more consumers are shopping at brick-and-mortar retail stores again, I believe this will benefit Square's gross payment volume growth because offline retail stores were impacted by the pandemic the most in 2020. Many retail businesses were forced to shut down and to start their online stores. Now, consumers in the US are shopping a lot more in offline retail stores again. As far as I know, I believe more sellers, including the larger sellers with annualized GPV more than 125,000, are using Square's POS systems, POS devices, and Cash App because of how easy it is to use Square's POS system and how integrated Square's ecosystem is across multiple channels from offline retail stores to online retail stores. Personally, I believe this omni-channel strategy and seller ecosystem are two of Square's biggest competitive advantage. I believe Square's second biggest growth catalyst is Cash App, which is one of the most popular payment apps in the US. Cash App is essentially a fintech business that's much more than payment services. This is from the most recent shareholder letter. If you look at this Cash App gross profit chart here compared with the seller gross profit chart beside it, you can see Cash App gross profit has been growing at a much higher growth rate than seller gross profit. And if you look at this chart here, you can see the increasing monthly inflows of money transferred to Cash App is the biggest gross profit driver for Square. This is very similar to banking. Square's gross profit is highly dependent on the amount of money customers bring into its Cash App. Customers can bring money to Square Cash App through peer-to-peer transfers, cash transfers from their bank accounts, and direct payroll deposits. As long as there is an increasing amount of money transferring to Cash App every month, we can expect Square's gross profit will continue to increase. Square's management said this. In 2021, a top strategic priority for Cash App is to make it easier for customers to bring funds into the ecosystem, which we have seen ultimately helps drive engagement. To be fair, Square's Cash App recent growth benefited a lot from the US government relief and stimulus programs because consumers had more spending power and received more stimulus money from the US government. So for example, in the recent Q1 2021 quarter, its Cash App gross profit increased 171% year over year, mainly driven by the large inflows of money in March related to government relief programs. Going forward, Cash App's gross profit growth will not be as high as the recent quarter's 171% year-over-year growth. This is because the US government stimulus and relief programs will eventually phase out as the US economy recovers. But looking ahead, I believe there will still be an increasing number of consumers and businesses using the Cash App because of how easy it is to use the Cash App to transfer money, to pay for products online and offline, and to trade Bitcoin and stocks. There are other extra perks such as instant discounts, loyalty, cash card, business accounts, and instant deposits up to 2 days early using the Cash App. I believe all these extra perks and services will drive more people to deposit more money into the Cash App. Square has other opportunities including its international expansion, TIDAL acquisition, and its new banking service. In the recent Q1 2021 quarter, Square earned 98% of its total revenues from the United States, and 2% of its total revenues came from the international market. This means Square still has a lot of growth opportunities outside of the US. Square completed its acquisition of TIDAL music streaming service in April this year. Jack Dorsey, co-founder and CEO of Square, said, "It comes down to one simple idea. finding new ways for artists to support their work. This will create a new business unit for Square. In my opinion, I think it will still be very hard for TIDAL to compete with Spotify and Apple Music, even with Square's financial support. As far as I know, TIDAL is not a profitable business yet. Square Financial Services was approved by the FDIC in March this year. Square Financial Services offers banking services including loan and deposit services. According to management, Square Financial Services business has not been material, but is expected to grow in the second half of 2021. Now, in the short term, I believe Square's biggest growth catalyst will still be its two main ecosystems I mentioned earlier, its seller ecosystem and its Cash App ecosystem in the US. Square's international expansion may become a larger growth catalyst in the future. Now, let's talk about Square's risk. The first major risk is obviously increasing competition. Square has many major competitors including PayPal, Venmo, which is also owned by PayPal, Shopify, Stripe, Apple Pay, and Google Pay. According to this article here, Stripe is Square's best alternative for customizable online payment processing. PayPal is the best alternative for mobile payments. Shopify is the best alternative for e-commerce and online retailer business. Also, Apple Pay and Google Pay are two other best alternatives for mobile payments, either in offline stores or online stores. In my opinion, I believe Square's seller ecosystem is much more sticky than its Cash App ecosystem because the switching costs for sellers are much higher if they decide to switch from Square's seller ecosystem to other POS and payment service providers. In comparison, it's much easier for consumers to switch from the Cash App to other apps that let them buy Bitcoin and transfer money to their friends and family. The second major risk is the recent decrease in Bitcoin price. Management said this. In February 2021, we invested $170 million in Bitcoin as we believe cryptocurrencies are an instrument of economic empowerment, which aligns with the company's purpose. We expect to hold this investment for the long term. At the time of making this video, Bitcoin price has decreased as much as 50% from its recent peak. As of March 31st, 2021, Square had $472 million worth of Bitcoin on its balance sheet. This means Square will likely have more impairment loss from Bitcoin investment in the upcoming quarters if Bitcoin price does not recover. The third main risk is that Square is not a very profitable business yet. Its operating margin was only 1.3% of its total net revenue in the recent Q1 2021 quarter. The company does not always generate positive cash flow from operating activities each quarter. So for example, in the recent Q1 2021 quarter, its net income was $39 million and it had a negative operating cash flow of $97.7 million. If Square does not generate consistent operating cash flow each quarter, it will issue more debts and more shares to finance its growth. Also, Square Capital originates loans for sellers and small businesses, including the businesses that have been impacted by the pandemic under the Paycheck Protection Program in the US. Square also opened a new banking service called Square Financial Services. All this means is that Square now has more credit risk if its small business loans default. Now let's talk about Square's fair intrinsic value. Let me show you this intrinsic value calculator here. If you want to use this calculator, you can download it in my Patreon blog. The link is in the video description. First, I define Square's intrinsic value as its future cash flow in its lifetime discounted to the present day. These are the key assumptions in my intrinsic value calculation. The first key assumption is that I am using Square's net income as a proxy for its cash flow. I'm not using Square's adjusted earnings before interest, taxes, depreciation, and amortization EBITDA as a proxy for Square's cash flow. This is because EBITDA does not include stock compensation, which is a huge expense for Square. I believe Square's net income is a better representation of Square's actual earnings than its EBITDA. The discount rate is 10%. This is compared to 9.3% WACC rate from Finbox. Square is a growth company with high revenue growth and high gross profit growth. I believe its cash flow will grow at a compound annual growth rate CAGR between 30% to 50% each year over the next 5 years. I believe this range is reasonable. To calculate the terminal value at the end of year 5, I'm using the average of both the perpetual growth model and the exit multiple model. Now let's go over these 3 case scenarios: worst case scenario, normal case scenario, and best case scenario. Under the worst case scenario, we're using a compound annual growth rate of 30% each year. If we project Square's cash flow to the next 5 years and then discount it to the present day using a 10% discount rate, then Square's intrinsic value as a whole company should be around $63.36 billion. And if we divide this by the shares outstanding, its intrinsic value should be around $139 per share. Under the normal case scenario, we're using a CAGR of 40%. If we project Square's cash flow to the next 5 years using a CAGR of 40% and then discount all this cash flow to the present day, then its intrinsic value as a whole company should be 91.29 billion. And if we divide this by the shares outstanding, its intrinsic value per share should be around $200 per share. Under the best case scenario, we're using a 50% compound annual growth rate. If we project Square's cash flow to the next 5 years and then discount it to the present day, then Square's intrinsic value as a whole company should be around 128.36 billion. And if we divide this by the shares outstanding, its intrinsic value should be around $282 per share. Personally, based on my estimate, I believe Square's fair intrinsic value is $200 per share or 91.29 billion as a whole company. This is under the normal case scenario. At the time of making this video, Square is traded at $239.94 per share and 109.26 billion in market cap. This means Square is likely substantially overvalued. So am I buying Square stock? Right now, I don't have any positions in Square stock. I am planning to wait until Square to drop below its fair intrinsic value before I decide to buy the stock, so there will be a good margin of safety. Personally, I like Square's long-term growth prospects, even though I believe Square does have a lot of competition. Based on my estimate, I believe Square's fair intrinsic value is around $200 per share or 91 billion as a whole company. Now, all these are only my estimates and my analysis based on my research. Make sure to always do your research first and do your extra due diligence. If you like this video, make sure to smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and portfolio videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a VIP patron. You'll be able to follow all the latest stocks I'm buying every month in my personal portfolio, and you'll be able to download the latest intrinsic value calculator for all the stocks I'm analyzing, so you will know when a stock is overvalued, fairly valued, or undervalued. Thank you for watching this video. This is Victor from the Intelligent Investor channel. I will see you in my next video.